Hello friends, welcome to our channel No Nuggets, a place where you will gain information through nuggets of knowledge. In today's video we will talk about home insurance, types of home insurance forms and home insurance coverages. So let's begin. What is home insurance? So home insurance is a type of property insurance that covers a private residence. It covers losses and damages to an individual's home. It typically includes coverage for the physical structure of the home, personal property. It also includes liability for any injuries and property damage sustained by the others on the property. It may also provide financial protection against natural disasters, theft, and other risks. It is an insurance policy that combines various personal insurance protections, which can include losses occurring in one's home, its contents, loss of use, or loss of other personal possessions of the homeowner, as well as liability insurance for accidents that may happen at the home or at the hands of homeowner within the policy territory. So homeowners policy is referred to as multiple lines insurance policy, meaning that it includes both property insurance and liability coverage with an indivisible premium. That means it is a single premium that is paid for all risks. The cost of homeowners insurance often depends on what it would cost to replace the house and which additional endorsements or riders are attached to the policy. There are different types of home insurance policy forms based on your living situation. Let's talk about them in brief. So the first form is HO1 basic form. It covers a homeowner's house against fire, lightning, and windstorm damage. This is a basic policy form that covers a limited number of perils such as fire, lightning, and windstorm. It is not commonly used as it provides very limited coverage. The second is HO2, that is broad form. It covers a homeowner's house and personal property against damage or loss due to theft, vandalism, and falling objects. It is not as comprehensive as HO3 as it only covers perils specifically listed in the policy. Okay, however, it provides broader coverage than HO1. Okay, then we have HO3 special form that covers a homeowner's house, personal property, and liability for any injuries or property damage sustained by the others on the property, with the exception of any perils specifically excluded in the policy. It is most common form of home insurance and it provides coverage for all risks except for those that are specifically excluded. So that is very important here. It covers the dwelling, personal property, and liability. Then we have HO4 contents broad form that covers renter's personal property and liability for any injuries or property damage sustained by others in the rental property. Okay, it is also known as renter's insurance. It does not cover the physical structure of the dwelling as the renter does not own the property. Then we have HO5, which is a comprehensive form, a policy that covers homeowner's house and personal property on an open peril basis, with the exception of any perils specifically excluded in the policy. It is a more comprehensive policy form that provides coverage for both dwelling and personal property on an open peril basis. It covers a wider range of perils than the HO1, but the policy holder must specifically list any excluded perils. The next is HO6, which is a unit owner's form. It is also known as condo insurance. It covers the interior of condominium unit as well as personal property and liability of the condominium owner. This policy is specifically designed for condominium owners and covers the interior of condominium unit as well as personal property and liability. As stated earlier, it does not cover the physical structure of the condominium building, as the owner does not own that property. Okay, next is the HO8, that is modified coverage form. It is also known as older home insurance. It covers an older home on a named perils basis. Now, this policy is designed for older homes and provides coverage on a named peril basis. It is similar to HO1 but specifically designed for older homes, which may have unique insurance needs. Now here the replacement cost or the older homes may have uh, more, these type of homes have more value than the market value, that exceeds the market value. These type of older homes have unique structures or unique needs because their value is more. Okay, now let's talk about homeowners insurance coverages. Okay, so for each policy there are typically 5 classifications of coverage. These are based on Standard Insurance Services Office or American Association of Insurance Service Firms. So we are discussing here homeowners more on the basis of US market. So these coverages are based, though these are very common for all homeowner insurance, but this is mostly these are classified based on US market. So number one is the property coverage. One of the property coverage, that is coverage A, dwelling coverage. Now it covers the physical structure of the home and any attached structures. It covers the value of the dwelling and a co-insurance clause states that as long as the dwelling is insured to 80% of the actual value, losses will be adjusted or at the replacement cost up to the policy limits. Okay, so that means your dwelling is insured up to 80% of the replacement actual cash value. Okay, now what is actual cash value? What is replacement cost? We will discuss further. Okay, this is in place to give a buffer against inflation because as insurance company also needs to consider inflation rates, right? So HO4 typically has no coverage A, although it has additional coverages for improvements. Why? Because HO4 is renter's insurance. Then we have coverage B, that is other structures coverage, which covers structures on the personal property that are not attached to the home, such as sheds or fences. Now it covers other structures around the property like which are not used for the business except it's a private garage. Okay, typically limited at 10 to 20% of the coverage A with additional amounts available by endorsement. Now again, this is not provided for HO4. Then we have coverage C, that is personal property coverage, which covers personal belongings such as furniture, appliances and clothing in the event of damage or loss. It covers personal property with limits for the theft and loss of particular classes of items. Okay, typically 70% of the coverage is required for contents, which means that consumers may pay for much more insurance than necessary. Okay, now there are two types of policies for personal property: cash value policy and replacement cost policy. So cash value policy will pay the cost to replace belongings minus depreciation, and replacement cost policy will reimburse the assured for the full current cost of replacing belongings. It will pay so replacement cost will pay full or current cost of the belonging, right? Whereas cash value will pay the cost to replace belongings minus depreciation. Okay, then we have coverage D, which is also known as loss of use coverage, additional living expenses coverage. Now this covers additional living expenses such as temporary housing if the house becomes uninhabitable due to a covered loss. Right. Now, it also covers expenses associated with additional living expenses such as rental expenses or fair rental value. So if the part of the residence was rented, however, only rental income for the actual rent of the space, not services provided such as utilities. So that means it may also cover the expense based on a fair rental value if a part of resident is rented. Right, but it is only for the rental income, not for the utilities that you are provided. They're not for the utilities. Okay. Then we have liability coverages. So one is coverage E, that is a liability coverage, which covers the policyholder's legal responsibilities for any injuries or property damage sustained by others on the property. So as the term liability that we discussed, or you can also refer to our video on property and casualty insurance, where casualty insurance is the liability insurance, right? So there we have defined what is liability. So it covers the policyholder's legal responsibility for any injuries or property damage sustained by others on the property, right? It covers the damages which the insured is legally liable for and provides a legal defense at the insurer's own expense. Okay, then we have coverage F, which is the medical payment coverage. That covers medical expenses for individuals injured on the property, regardless of who is at fault. Okay, now as we we covered our insurance coverages, we covered forms. There are certain terms that you might be wondering what are those. So there are some important terms that you must know. One is peril. This is specific type of risk or danger that is covered by the policy. Okay, there can be open and named peril. Please refer to our video on hazard and perils, for which we have provided a link at the top right corner. Okay, then we have replacement cost. It is the amount of money that it would take to repair or rebuild the property or replace the damaged items with new ones of similar quality and value. So it is to replace the damaged items, replacement cost. Okay, and actual cash value, it is the replacement cost of the property or item minus depreciation. So depreciation is the decrease in the value that occurs over time due to age, wear and tear. So actual cash value is typically less than the replacement cost. Okay. So I hope you like this video and gain knowledge. Please like and subscribe our channel and watch out for more videos like this. Thank you.